Okay, good morning, guys. Auction clearance rates, the Da Vinci Code of real estate. Why do we use auction clearance rates as the metric, the holy grail, when there's so many other factors involved here? We're going to unpack it this morning, guys. Stay tuned. Whoa, juicy, juicy.
Morning. It is
Good morning,
indeed.
Billy. How are
I'm
ya?
just not sure if we're live on Facebook. That's all. We're definitely live on LinkedIn and YouTube.
We've had some little glitches this morning. Anyway, all good. We will sail through, Billy. Let's continue. The show must go on. So, guys, I was watching a video last night. A very good friend of mine, Gav Reynolds. He's many things, but one of the many hats that he wears is an auctioneer, and he operates around that sort of Newcastle area. You can watch the video on my social media, on my Facebook pages. We'll also pop it in here as well. But he was talking about exactly this. And I'm like, yes, Gav. I'm screaming out at the video. This is exactly what I think. Why are we using auction clearance rates as the only metric of what is going on the ground in real estate? Billy, what's the auction clearance rates?
Yeah, I've got it behind me, actually. There was 1,090 private sales for last week in New South Wales.
So just explain what that is. What do you mean private sale?
Everything that's not recorded as an auction. But there were 974 auctions scheduled between Monday the 8th and Sunday the 14th last week.
And where's that? Where are we talking?
Right across New South Wales.
Yep.
And of the 974, 44% were reported as sold. So that's where they base their auction clearance rate from. And
okay,
of that percentage, 193 sold at auction, 228 were reported as sold prior to auction, 420 withdrawn, and 125 passed in, 8 sold after auction. There you go.
Where is that metric? Like, where is it? Guys, the auction clearance rates do not make up the market. We must stop referring to it as the absolute holy grail. People are fixated with it. So newsflash, that is a very small quadrant of how we sell properties in real estate. That is not the market. That is one story. That is one chapter of the story. There's a lot more that goes on to make up the full picture here. So when everyone reports, and it's the media's fault, right? Because they report the auction clearance rates and everyone goes, oh my God, oh, it's just terrible out there. Guess what? A, it's not. And B, we're selling properties by private treaty, which is the vast majority of the way that we as an agency, and we're a very large agency on the Northern Beaches, are transacting properties. And guess what? The other way is off market. Doesn't mean it's off the Richter. It doesn't mean it should not be recorded anywhere. We're doing an enormous amount of properties that are not actually hitting the portals. They're definitely not going under the hammer. They are being sold. The solds are being recorded, like as in you can go to the major real estate portals, but they're not going to come up under the auction clearance rate figures.
Yeah. I think just for such a long time, though, it has been the holy grail. It's been the number that people have really spent a lot of time tracking, and it's always, as you said, been reported in the media. It's been an easy one for them to make news headlines out of. So I think that's why the newspapers tend to default back to that. Because if it wasn't, somewhat reliable, people would just toss it altogether. But, clearly it pulls on the heartstrings. So for buyer sentiment, it's an important one.
So I know, but it can't be the absolute, as we're saying, it can't be like the Da Vinci Code, like, we see what's going on out there in the market because the auction clearance rates for this week are sitting at 44%. That's in Sydney. Like, what metric are they using in regional areas just a question here where they don't auction at all. So at least in an area like Sydney, certainly we hold auctions.
Yeah.
But you know what we're suggesting here is, and as I said, Gav Reynolds, massive auctioneer in the Newcastle area. Have a look at what he's saying. He is
Yeah.
an auctioneer, guys.
You
And you
can,
know,
you go right there.
have a look.
There you go. So there's
What?
your clearance rates. There's all those numbers we've just spoken about. And then for your regional areas, look at this list. Some properties, you know, there's just one result reported per postcode.
Yep. Okay, so what is a better metric? Let's talk about this for a second. What is a better metric? Billy, I'm going to throw it to you. I'm interested to hear what you have to say. So if we said today, no more auction clearance rates are going to be used as a metric to what is going on in the market, what's a better metric in your opinion?
I believe the number one metric for any market is how many active listings are live on the portal, realestate.com or domain, whichever's biggest in your area. Basic supply and demand. So you can quite easily talk to your agent and work out what a normal sort of level of listings is. Keep that as your median, and then from there track whether it's higher or lower. And you can pretty quickly work out whether it's a seller's market if there's fewer listings, less competition online, more buyers per property, or if there's a lot of active listings, it dilutes the buyer pool and buyers have got choice.
And let's help you guys out there because I agree wholeheartedly with you, Billy. But into that equation, so not only the amount of stock that we're seeing on the market, which is so important, because when we have an oversupply, it usually means we are hardcore buyers market. When we have an undersupply of stock, and I'm going to give you what those figures would look like in a moment, when we have an undersupply of stock, it's safe to say it's a seller's market. When we have an average amount of stock on the market, it's a balanced market. So I'm going to ask you the question, Billy. Northern Beaches, which is where we operate in Sydney, what would you consider to be an undersupply of stock? And we're talking about houses and apartments across the Northern Beaches.
Yeah, so combined, usually you'd see, I guess, an average of maybe 1,000 properties. That's what it's been for the last sort of 5 years since we've been tracking it. And, you know, at the moment, you know, you can sort of see it dip into, like on Christmas Day example, it tends to sit at just under 500. So it halves throughout that December, January period where there's no replenishment of stock. So that's where it's at its lowest for the year. And then it can be up around 1,200 as well.
Yep, agreed. So, okay, now let's just use that metric for 1 second, Billy, because people think it's Armageddon out here in real estate world. They're looking again at those auction clearance rates, which the media has fed us that is the holy grail of what's going on in the market. That is absolutely not the case. That is one part. As I said, that is one chapter of the story. There's other chapters that make up the entire book. The at the moment, what are we sitting on? So if you're saying average is about 1,000 properties on the market when we look at the real estate portals, what are we sitting on currently on the Northern Beaches in Sydney right this minute?
I last had a look on Wednesday. It was 897 properties. So that's come off 10%, you know, from that 1,000 mark. Just a little more.
Okay. So, guys, we're not seeing over 1,000 properties. We are not seeing a massive saturation like what people think, because the media has people believing that everyone is selling up, every investor is out of the market, and that people are selling for, you know, half the price of what they paid for a property. It's not true. And this is what is keeping in our area. Now, listen, it could be different in different areas. We operate in a Sydney market in the Northern Beaches. In our area, those stock levels are sitting towards the lower side. And that is what is keeping these property prices stable. Yes, we have seen a dip of approximately 7 to 10%. But I'm going to call it right now, and I'd love to rewatch this video and see what it looks like in 6 months' time. If there was a bell to ring when we've reached the bottom of the market, I'm ringing it now. We don't have a bell. I'm ringing the bell now and I'm saying this is it. I am suggesting on the Northern Beaches that we have probably hit the bottom of the market. How do
Yeah,
we
it's
know when
been
the market's turned, Billy? What are the signs that we know when the market's turned?
so you tend to find your days on market start tightening in again. How many days it takes to sell a property will start contracting back in, because we're quite fortunate in our market. Days on market fairly quick. It's probably 3 to 4 weeks as an average. That's blown out a little bit from there. Then you start to see more properties with buyers on at the end, so more offers. If it is an auction, you tend to see more registered bidders. That's a great metric. And then it starts to sort of turn around, tracking what prices they're selling for, and then sort of where the final price sits tends to be above the guide.
And then the other telltale sign, guys, of when it was the bottom of the market, when you missed it and the market started to come back up again, and then you're like, oh my God, I should have bought then. I should have bought then. So the discount is here. They're already talking about holding those interest rates. Now, not to suggest that they may not go up again. Obviously, this is a very delicate balance at the moment to get everything right, but they are already talking about holding those rates. Now, what does that do when they hold rates? It builds up buyer confidence again. And that's kind of what we've been lacking for the last 8 weeks, because there's been so much information to digest between the interest rate hikes that no one really saw coming and the budget that was handed down. That gave us a big whack on our buyer confidence.
Yeah,
But we're seeing that coming back. Sorry, Billy.
Yeah, that buyer sentiment will shift, and it's interesting. Like, we've been following these stock numbers since, just to give you a few key dates. 16th of March, there was 1,005 properties on realestate.com, and then more recently, it was 931 in April. 2nd of May, 996, and then it started dropping. 30th of May, 943. So there's not as much of a replenishment of stock.
Yeah, and we've had lots. We've had lots and lots and lots going on. So spring will be interesting. Always naturally, and we're tracking the year on year, guys. We're not interested in looking at what happened this week, what's happening next week. We're tracking year on year. So if we see a massive surge of stock hitting the market in spring, we will compare that to the year prior to see how that differed. And we will definitely report those facts to you. But yes, auction clearance rates, please don't use that as the absolute holy grail. There is so many more things that we need to consider. And just to recap, Billy, you're talking about stock levels. I agree. That's a wonderful metric in your area. Days on market, how long it's taking for properties to sell, where it was maybe taking 10 days and now it's taking 25 days. There's a good metric. And price guides. Price guides. What were those similar properties selling for 6 months ago? 2.2, and now they're selling for $2 million. I think these are great metrics. They really are. That's it, guys. Hopefully that's helped some of you out there. And Billy, thank you as always.
Thank you. Have a good day. See you later.
See you guys.